Hello, everybody. Joe Malone coming to you live on Dallas Trading Floor. Hope everyone is doing well today. It's Friday. The market has rebounded a little bit, but the question is it a good time to get back in right now? And I'm not so sure about that because many times when we have these rebounds, it can be very difficult and it can pull back. So I'm not totally convinced yet that we should be totally in the market, and so that's kind of what I'm looking at. The major indexes have moved higher, but the question is, what is going to happen with this thing that's going on in Russia and Ukraine. I mean, it's it's a really fluid situation, and it just can't be underestimated. So I'm a little bit on the cautious side right now, and because we did get the snapback rally, but I kind of want to just go into the slides. Basically, here's the market overview today. All the major indexes are up, which is indeed a very, very good thing for the market. So definitely am looking at the market, and I think that that is indeed good. Let's take a look at the Nasdaq on the live chart here and see. We pulled all the way down, basically below 1300, and then looks like we have a little bit of a bounce here, which is a good thing today. We moved up yesterday. That was the beginning of the rally. This is day 2 of the rally attempt. Now, remember, we need to have 4 days of rally above the prior close to have a rally attempt and a potential follow-through day. So we don't probably want to go in to the market very heavily until we see a follow-through day. So I'm not so sure that's going to happen. It takes 4 days and then a close on that 5th day above the former the former day. So we're on day 2 of that rally attempt. This is what the Nasdaq is looking like. By the way, if you're watching on TikTok, super easy to take a look at these charts that I'm showing. I can't show them on TikTok directly, but I am showing them simultaneously on YouTube. Easy to get to YouTube. Just go up here to the link in the profile, and you should see the live feed for that. So that's kind of what's going on. We definitely are in day 2 of this rally attempt. So that indeed is very good. This is currently what I have on. This is what I have long. These are the long positions that I have. I'm in Alphabet, of course. Everybody knows that we're going to have the 20-for-1 split, and I definitely think this will affect the price of Google stock. Of course, there are 2 classes of Google stock. GOOGL, that is the Class A shares. That's the ones that I own. And then there's also GOOG, that's the Class C shares. They both trade approximately the same amount. Google moved up very nicely. It's almost at the 200-day moving average. Typically, I don't like to buy anything below that 200-day moving average. And as you can see, we are moving up to it. Take a look at the technicals here, and this will give you an idea of how close to that 200-day moving average we are. We are just slightly below it. We're basically almost a percent, just slightly less than a percent below that 200-day line. And then if it moves above that, potentially we could start putting our foot back in the water. Google has, right now, it has 100% checklist. This is extremely strong relative to the other stocks that are in the tech space. The tech space, as you know, has been getting hammered as of late, and it's tough to find good candidates in that tech space. One of them that I think, at least for the mid to long term, is going to be Google. Because, of course, of this 20-for-1 split. Another one that you might want to put on your watch list. By the way, we do have a new watch list that's come out, and I'll be showing you that in just a second. But we do have also another one that has been moving up very nicely. I have not bought this one yet. You might want to take a look at it. It's Micron Technology, MU. This is in the technology space. So, again, it is a little bit more, it's a little bit early for the tech space, but this one has, forming a cup with handle formation. This is very good. The buy point on Micron on this one is 96.50. We're at 90.28, so we're close to that buy point. And this one possibly is another one that you could possibly look at. Again, this one has a 100% checklist. The symbol on it, of course, is MU. And in terms of the technical, we are slightly below the 10-day line. This is not a bad place to possibly start if we have a follow-through day going with a larger position. I do have a lot of conviction in Micron, as it has had some very good. It's had some very good earnings. The last earnings that it just came out with, these are the November earnings. Obviously, they just announced these. These were very, very good. Sales were up 33%, but the profits, and that's the key, were up 177%. So this is one you might want to put on your watch list, Micron Technology. Also, in what I'm holding currently, I'm a little bit down on Matador. Surprised at that because, the price of oil, but it is very volatile. So that one has not moved quite as well. I'm also in a stock called Nutrien. This is, believe it or not, a fertilizer company. It's up nicely. It's been doing well since the beginning of the year. Also, I have a position in Williams Company. This is WMB, and this is a pipeline. So let's take a look at Williams WMB as one of the ones that I am holding long. This is not an options trade. I actually hold this one. I actually hold the shares in this one as well. And that's in the small portfolio if you are on the list for Action Trade Alerts. I definitely show that. I pretty much show that to everyone out there. We're going to be revamping a lot of this stuff, but for right now, I think it's a good one to take a look at. This is this is Williams Companies. Let me get that so that you can see it better. There we go. And I'm going to take off that. I think we've got some of the technical. Fortunately, we've got some of the technical issues straightened out. We had to do a software upgrade, and that was one of the things that was holding us back before we had some issues regarding that. So I do appreciate everyone hanging in there with me. But this is one you might want to consider as well. It's Williams Companies. It's right in the buy zone right now. It's in this cup with handle position. I would bought it back a few days ago on the 31st of January. My entry price on this one for a full position was $30.02. Currently, it's at $30.69. So it hasn't really done anything, but I do think that there is some potential in this one as well. On the technicals, it's looking fairly good. It's also got a 100% checklist. I'm trying to only traffic in the strongest stocks right now, just because this market is so tricky to trade, and that's been definitely the case. Talking about trades, here is Etsy. This is an iron condor that we put together, and we were considering closing this one early, but Etsy had a tremendous move up today, putting us right back into the green profit zone. So some of the people in the Discord room asked us, whether or not I was going to close it. Initially, I thought I was going to, but now with the way the action is looking, and I'm going to show you the chart, I think with the action on it, I'm probably not going to be closing this one. I'm probably going to let it go until the end of the term. It's basically moved above that 21-day line, and so it seems as if it is starting to make a move. It's off a little bit after hours, but it's holding about that 149 level, and that, as you can see on the chart, puts it right into the green zone on the chart. So that is indeed looking good. We're going to go to the next slide here. Yes, there we go. Okay. And this one is, as I promised before, Cheniere. This one has done very, very well. Now, this is a play that should do well in the with the crisis in Europe, and that is Cheniere. This is a company that has what they call natural gas trains. They take natural gas, they liquefy them. And of course, this is what's probably going to end up being sold in Germany because, of course, the Nord Stream 2 pipeline, which is coming from Russia into Germany, that may be delayed because of this war in the Ukraine. Who knows? But the definitely Cheniere, which liquefies natural gas and exports them from two ports, one in Sabine Pass, Louisiana, and the other one in Corpus Christi, Texas, does look like it may benefit from a move with higher natural gas prices, and it definitely did that yesterday. But it was up yesterday a lot, all the way up to 140. Then it pulled back, but it's up again today. And I do think we're going to see a lot of strength in this. We've definitely seen some big players come into this one. This one doesn't have quite as strong a checklist as Micron and as Micron. This checklist on this one is 78, so that's pretty good, but it is not as good as some of the other stocks. So pulling up the live chart, take a look at this one and see if there's any good entry points in this one. Well, we are a little bit extended here. We're 8.63% above the 10-day line, and of course we want to buy it within about 5% of that line. But this is one I definitely think is worthy of putting on the stock on your watch list. I definitely think this one is moving higher. Using the pattern recognition that we have, it's about 14% above the pivot, so that is a little bit extended. So we want to be careful buying this. We want it probably to settle a little bit more, but if this settles down to about the 10-day line, I think that's where we could possibly buy that. By the way, when I'm talking about this, the 10-day line is this is the 10-day moving average. And I typically like, if I can't buy at what they call the buy point, the pivot, I typically like to buy at the 10-day line, as close as that as I can get it. And in this case, we're a little bit extended because we're above that. But if it pulls back a little bit, I would say maybe to about 114 or so. Sorry. If it pulls back to about 118 or possibly 120, it's a little bit of a. We might have to wait a little bit on that, but that's where we kind of want to buy it. The way I buy these typically is that I will inch the price up. I will take my limit, put it at 120, and then if I don't get a fill, I'll move it up a little bit. But I do think this one will settle down, and I do think this one could be potentially a very, very good buy. Cheniere, it's LNG is the symbol on that one. All right, so I wanted to also talk about volatility in the market. We had a drop in volatility, tremendous drop in volatility, which is a good thing, because obviously the higher the volatility, the more difficult it is to figure out. So we did have a drop in the volatility, which is good. So it means that we may get those follow through days. We're on day 2 of a rally attempt. We need 2 more days and then a close above that, above that, in order to get a follow through day. We're not there yet. We may get one next week. I'm hoping we will. But the decrease in the volatility definitely has been a benefit. I have a new stock watch list out. Just came out just a few minutes ago. We put it up there for everyone. In order to get that, super easy, just go to this address, https://bit.ly/DTF. That's Dallas Trading Floor 0089. That's the 0089. And you'll be able to see that watch list for today, February 25th. If you're looking on TikTok, no problem to get on that and see that watch list. All you have to do is go to the profile, click on the link, and you will see a watch. You will see a watch list for that. So, without further ado, let's see if I can get some of the. Okay, can you check Foot Locker? Yeah, unfortunately, thank you for that. The Foot Locker trade definitely did not do well. I did close the trade, but the Foot Locker moved down tremendously, and I'm afraid that one did not work out as well as we would have liked it. It just took an absolute swan dive, and I did. I was fortunate. I was able to close the trade prior to the prior to the earnings report, but the earnings report was bad, and so that one is unfortunately not doing very well right now. So with Foot Locker, I think if you're down more than 7%, and I definitely was down more than 7% on this one, on the options trade, the best thing I think we can do is close it and look for something else better. So that one just did not work, and I wish it had, but it's an odds game here, and sometimes they just don't work, and that's definitely the case with Foot Locker. The Foot Locker trade just did not work out very well. So I think that it was a disappointment. I thought it was going to be a much better. I thought they're going to have a much better report than what they did, but this is something that we've got to be careful on. The market has changed a lot, and it just did not do well. And so I think that probably the best thing to do with Foot Locker, the Foot Locker trade that I had out there, unfortunately, that's probably going to end up losing. And I definitely lost on this one as well. So that's the situation here. We did have a report; they were up in terms of sales and in profit, but just not enough. And the relative strength on this is 11. So not what you'd like to see in a um, not what you like to see in a stock. Absolutely not what you like to see in a stock. Let's take some questions. Thanks so much for holding on, and let's take a look. Hello, Jim. Your thoughts about PDCE? Let's look at that one. PDCE and PDCE. Let's see if we can get that up. And that is, I don't know this stock. PDC Energy. This is a E&P company in Denver. Don't know a lot about it. We went through earnings are in 4 days. It seems to be it's right below the buy point, and it seems to be on the weekly chart. So that's not a bad sign for the E&Ps. Let's see if we got some support. We got some support at the. It looks like we got some support at the 50-day line. So that is indeed good, and a little bit of buying. I just really can't say a lot about this one. Don't know this stock very well. Let's look at the checklist to see kind of how it's looking. Well, it's not a bad checklist. 89 is an excellent checklist. So I would be cautious about this one, but I think you could definitely start, and it's on a rebound. So I definitely think you could start building a position here. I would probably go with a half position first, but this is not looking bad on the. This is not looking bad. So my kind of advice here would be to possibly do a half position. So that's kind of what I would say. So I think half position is okay here, and so that's what I would definitely go with PDC Energy. It does look like it's a decent chart, and so absolutely, that looks like something that might work very well. So not a bad stock. Let me see if I can find something else. Okay. Oops. Let's see. Looking on TikTok here. Let's look at BA at Boeing and see kind of what's going on there. Boeing, of course, is a Dow stock. I'm not particularly a fan of it right now, but with the weakness in the travel sector, but it is definitely something that we can look at. And it did. We did see it move. We did see it move up today a little bit in price, and it does look like it's getting some support. So could you buy this? Well, it's in a downward trend and it's below the 200-day line. I think you got to be super careful with Boeing because it is below the 200-day line. Even though it is a great stock, BA is below the 200-day moving average. So it isn't a buy right now. So that's kind of my take on Boeing. I just don't think, you know, with it being below that 200-day line, and of course that's this black line here, and that would be on the technical analysis. I just don't think it's a buy right now. So I think you have to be. I think you have to kind of put it possibly and put it away for a while. I don't see this particularly a particularly good chart here for Boeing. We're below the 200-day line. We're in a downward trend, and the last sales report was down. Boeing was down 2% in terms of sales, and it was down 7% in terms of profits. And that's a problem when it comes to a mega cap stock like this. That is a miss. And so overall, I would have to say that we have to be very careful with Boeing. It is not a buy for me for right now. So, and I would even be concerned about putting this on the watch list because of the situation there. So let me see if I can get another question from TikTok. Thank you so much. What about XLP? XLP, of course, is one of the Spider Selects, and the Spider Selects are ETFs, of course. And this one is in the consumer staples area. This is a safe harbor trade. I think that you know, when times are difficult to figure it out, the XLE is a place that a lot of people will go because it is a very safe trade in terms of things. So the XLE, is a safe harbor trade. Now, when the market is moving like this and it's been moving down and it's very uncertain, people will typically gravitate towards trades like this that are in things like the XLE. Now, the XLE has moved up a little bit today. It came down to the 200-day moving average, and then it bounced up. So it is sort of making a case that it may be moving higher. But I would be a little bit leery about this one. I don't think this is your best bet in terms of the ETFs. I think if you're looking for an ETF that's going to have better results, I think you should look at the XLE. This is also a Spider Select sector fund, but this one is in the energy sector. And I think the energy sector is going to be the sector that is going to do the best in the near future. And this one has been a decent performer, and it does look like it's reversing off the 21-day line. So this is one, if you're looking for a safe harbor trade, and to put some put some cash to work, but with a little bit more safety, I think that it's the XLE that you might that you might want to look at. So the XLE definitely is something that I think that you want to look at. But if you're looking for an ETF, now of course an ETF is in the stock; it's a basket of stocks. But this one has been performing very, very well. I'll show you the technicals on this one, and they are decent. We're up. We're up over the 200-day line, 50, 21, and 10. So even in a down market, this one has been performing well. So if you want to put some money to work, I still think it's not too late to get in on the XLE. Might be a good place to kind of be in this sort of this uncertain environment where it's very difficult to figure out what's going on. All right, let's take another question. Thank you so very much. What about Tesla? Right now I think Tesla is in a basing period. I'm not in Tesla. I do like Tesla a lot, and I think long term Tesla is a great stock. But unless you were a buyer below really about 700, I think it's going to be tough to be in Tesla. It just has been a slowly, it has pulled back down and then it's pulled back up. So I want to show you the Tesla chart here, just so that we could kind of grade this one. We fell below that 200-day line, and of course that's a key level. That's a key level. Currently, the 200-day line for Tesla is right at about 832. We're at 813 right now, so we are below that 200-day line. We are in a downward trend on Tesla. I hate to admit that, but it's true. We are in a downward trend, so not a good time to be in Tesla right now. Here's the thing with Tesla. I definitely think we're going to see it come back, but right now I just think you got to protect yourself. And what I would do in this case is not let the stock move against you more than about 7%. So if you're down more than 7% on this one, think about possibly moving, at least cashing out for right now, and then, and then getting back in when it starts to make a movement back up. The key level on Tesla is the $900 level. That is the key level, and we are trading currently below that in a downward trend. So right now, with Tesla, I just think you've got to be, you got to be on the sidelines for Tesla. So with Tesla, wait to buy. I definitely think that come a few years from now, Tesla is going to be bigger, but I don't think it's retraced all the way down. I think it's going to move down to about the $700 level, and then I think we're going to get a base there. So if you're down more than 7% on it, sell. Probably a good time to sell it and wait for it to move lower and then get some strength and move up. So right now we're in a downward trend on Tesla. I just, unfortunately, and this is painful because I do like the stock so much. I don't think you can buy it right now. It's just not in a good situation. Jeet is asking about TER. Let's take a look there to see what's happening with the stock. Teradyne. Okay, this is also trading below the 200-day moving average, but remember, a lot of stocks are trading below that 200-day line. So it is difficult to find anything out there right now, at least in the market right now, that is viable outside of the oil and gas area and a few select technology issues. Unfortunately, this is probably not in a space where we can buy it. It has moved up to the 21-day line, but it is still below that 200-day line. So I would be careful with this one. Potentially, it could be bought, but I think for right now, you've just got to watch list this one. It's tough. So it's a watch list for now. Wait for it to move above the 200-day moving average, and that right now is the 200-day moving average on Teradyne right now is about 130. So so above 130. I think that's kind of what you got to do here with Teradyne. This is really a watch list stock right now. I think you got to wait for it to move above this area here, and that is the 200-day moving average. So I think it's just really that's really all you can do in this situation for right now. It just doesn't look strong enough to to do anything there. So wow. Hey, thank you very much for commenting. I so appreciate it. Just gonna take a little picture. Thank you very, very much as well, Joe Trader. That's a great thing. Which bank stock would you add to your list? SC, BIC, or Wells Fargo? Wells Fargo, BIC, or Citi? Well, let's compare them. That's a good question. Very, very good question. Let's look at them one at a time. Let's first look at Citi, which is of course symbol C is Citi, and that's Citibank. And let's take a look at Citi right now. Let's see if I can pull up Citi. Oh, there we go. Okay. All right. So with Citibank, we are below the 200-day line. which is an issue. We are also below that 50-day line. We did get a nice bounce today. I have not done anything with Citi. It's got a relative strength of 35 against the market. That means that 65% of the stocks in the market are doing better than Citi. I just can't say. I just can't say that this is ready to buy. So I would be careful with Citi, even though we did have a bounce today. But right now I think we've got to say, right now I think we've got to say no on Citi. I just think we've got to go no on it because it is below that 200-day line, and I think that that's one of the ones that we can't really do anything with. Let's look at Wells Fargo next to see if there's any strength there. WFC, of course, is Wells Fargo. And there we go, Wells Fargo and Company. This one's a little bit stronger. It is above that 200-day moving average. It's just deadly when you buy below that 200-day moving average. So this is looking a lot better. Relative strength is 93 on this one. Let's look at the checklist on Wells Fargo. And I think the checklist is fairly good. Yes, it is. A 78 checklist on that. Where it's falling down, of course, is earnings per share and sales, but everything else is looking fairly good. So let's look at the fundamentals on Wells Fargo to see what we can do there. And there we go. So we had a very nice report on Wells Fargo. Our sales were up 10% and our profits, and that's the key, were up 26%. So this one definitely is a cautious yes. I would say no on Citi, but yes on Wells Fargo, because Wells Fargo is just stronger than Citicorp is. There's no question about it in looking at this. For the other ones, let's see. Let's look at BAC. Let's look at Bank of America. So definite yes on Wells Fargo. Let's look at BAC, Bank of America, BAC. Let's see if we can compare it between the two and get an idea which one is the better of the two. On Bank of America, it is a little bit weak. It is definitely pulled above the 200-day moving average on the weekly chart, but it pulled and it's making a move above that. I would have to say, out of these three, I think that your best bet on your bank stocks right now is going to be on Wells Fargo. So that is going to be your best bet. So what I would say is, best bet for bank stocks is WFC. Let's go back there. And let's see if we can find a place to buy it. WFC is Wells Fargo. There we go. And so basically, that's sort of what we've got to do. So the best bet really in the bank stocks is Wells Fargo. The question is, can we buy it? And I do think that, it does look like it's reversing. But here's what I would do. I would wait. I think you've got to draw a trend line. And unfortunately, you don't want to draw these trend lines too steep. But what I would do is I would draw this trend line about like this and set an alert on that for a potential buy. Now, I only really want to buy this, trend line, trend line. And what I'm doing here is I'm creating a note, and I'm making a note on the trend line if it can pull above this line. So we definitely have to go a little bit of a ways here for it to buy. I wouldn't buy this one unless it moved above about 57. That would be my guess on this one. So, I would set possible buy if WFC moves above, and let's look at that trend line again, about 57.50, I would say. So I want to see it move above about 57.50 because I want to make sure that it has broken the downward trend. Currently, currently it is in a downward trend. Um, so I would say I think it is a buy only if it moves above about 57.50. Why do I say that? I want to make sure that it's confirmed into an uptrend, and this reversal line will show us when it has. So I would wait on this one. I wouldn't buy this now because it's in a downward trend. But if you want to get it early, I think that you could possibly buy it above 57.50. That's kind of where I would look to potentially buy the stock. All right, let's take some more questions. Thank you very much for everything. All right, and okay. Should I stay in Qualcomm right now? It's moved 8% against me, but did not sell it yet. Okay, well, my typical rule is 7%, so you're right on the bubble. Let's look at Qualcomm and see. Okay. Well, it's pulled back after hours. It does look like it may have reversed. Um, Gosh, boy, this is a tough one. We do have a rising relative strength line, so that is good. We definitely like that there. Let's kind of look at C on the technicals. We are above the 200-day line. That is good, and we are below the 50 and the third 21, but we're above the 10-day line, so it's near term. It's looking like it's going to move higher. Boy, I tell you what, I would set a stop loss on this one. I wouldn't let this one. I wouldn't let this one move too much lower. But because we didn't have a stop on it before, I would set a stop loss on this one, and I would set that at about. Well, I think what you got to do here, and this is going to be tough. I normally don't say this, but I would set a stop loss at about 156 or 155. So what I would do on this one, I wouldn't necessarily sell it yet if you want to hold on to it. And I don't normally say this, but set a stop loss at 156. I think that's going to be for Qualcomm. Okay, now normally I wouldn't say this. Normally I wouldn't say this. We're currently at 170.88. You have to be willing if you're already down 8%. I totally understand where you're coming at. It does look like there is a reversal on here, but we've got to be careful. This is the absolute. I would not let it move anything below 156 because if it moves below 156, then it is in a downward trend. It looks like it may be turning the corner and it may be moving up, but we've got to be very careful about this. So at the maximum, I would set the stop loss for 156. Normally, I would say don't do it that way. Normally this is what I would say if you never let it move more than 7% against you. But in this case, because you haven't stopped out yet, put in a stop loss at 156. If it moves higher, then move that stop loss up. So that might be of a help to you on that. I know this is always difficult when you're doing this. Hey, thanks also for that great comment, Samuel. So appreciate it. I've been having some technical difficulties as of late, so hopefully I will be. I've got a new machine. I've upgraded the operating system, and hopefully everything is going to work out now very, very well. All right, should I stay in Qualcomm? Moved 6% against me, but did not sell it yet. Okay, basically, here's what I would do with that one. As we indicated before, normally I wouldn't say to do this, but I think Qualcomm is a quality stock, and I definitely think it's looking like it is possibly it's possibly going to move a little. It's probably looks like it's going to reverse. But here's the thing: you want to set that stop loss at about 156, um, about 156. So that's where I would set my stop on this one. All right, let's take a look at mRNA for Samuel. Thank you for it so much, and then we're going to take some questions from TikTok. mRNA, of course, it's Moderna. And this one has been sort of a disappointment, I have to admit. A lot of stocks have really been a disappointment. This is in a downward trend, as you can see. I was in this one above. I was in this one up here back. I was basically in this back in September, and then I was out. I took profits, and then I was out, and then it fell. We did have this death cross. I don't know if you could see this on the screen, but this is what they call the death cross, and this is when the 50-day moves below the 200-day. That indicates weakness, and definitely we've had it here. Now, the question about Moderna, what can we do with this? This is a potential short candidate. I want to indicate that. This is a potential short candidate. So, this is not a perfect short, but I think that this one might be potentially a good shorting candidate. So what I'm doing is I'm looking at the checklist here. It is falling in terms of it's falling somewhat, and it's becoming more difficult in terms of things. Let's go to TikTok. Let's go to let's see if we've got. Okay, now this is all right. Okay, so that was actually our Discord room. By the way, if you're not already into the Discord room, super easy to get involved with that, and we have a lot of good trades on that. And we start that at 8:30 in the morning Central Time. Just easily, to get more information on that, just go to www.dallastradingfloor.com, and then we have a little button that you can push, and hopefully we'll have some more information on that for everybody. For everybody. So thank you for that so much. All right, let's go back to TikTok. Let me see if I can get a. Okay. Oh, Grand Terra Energy. I have not heard of this one. GTE. Let's look at GTE. I'm very interested. Of course, I'm interested always in all the energy stocks right now. That's one of the areas of the market that's doing really well. Let's look at GTE. I'm not sure about this one. Just want to kind of get a look at it. Grand Terra Energy. Well, it's a penny stock, that's for sure, and it looks like it's engaged in the acquisition and exploration of oil and gas in Colombia and Ecuador. Okay, well that's interesting to me because I'm not familiar with this stock, but it looks like it is trading on the New York Small Cap. I'm just trying to get some more information on it. This is not on my radar screen currently, but I kind of want to look at it. Grand Terra Energy. Interesting. Okay, well, we've got an interesting thing. So let's see if we can take a look at their video. And this is kind of interesting to me. So what I'm going to do here is I'm going to move it over to Grand Terra Energy and see. This is their website. I don't know anything about this. I don't know anything about this this company, but I'm gonna put it up on the screen and see. This kind of has a interesting. Let's kind of look at it. Yeah, it's kind of interesting. They've got an interesting video. This is a $1 stock, by the way. Well, it's a $1.38 stock. So this is kind of their look-see. So let's see if we can. Let's just look at their performance. I don't think they have performance data. They've got a nice video, but I'm not so sure. Well, let's look at these. These are in, let's see, millions. Okay, so well they've got it. It looks like it's increasing. Oh no, they fell off this last year. So I don't know about this one. hard to say with Terra Energy. I'm going to look kind of at my statistics, which I think sometimes are better uh, on this company. Not that familiar with them. I kind of want to look, kind of get a bird's eye view of this company, Grand Terra Energy. And let's see. Okay, well, they definitely had some good numbers. They just came through earnings. So let's look at their numbers. And this is for somebody on TikTok. Thank you very much for this question, and see if we can analyze this chart to see kind of what's going on um, in terms of Grand Terra Energy. Let's look at the fundamentals. There they had a sales increase, which is not surprising because oil and gas has been going up 126%. They just reported, and their profits, and this is really interesting, up 231%. So this is not a bad chart, I have to admit. Now, normally I am not a fan of penny stocks because typically for it to be investable by a fund, you have to have over $10 in price. But that seems to not be the case here. But the earnings were stellar. And let's see, let's just kind of look at the checklist and see. Well, this is an excellent checklist for a stock that is so cheap. The only thing is its current price is below $10, and the earnings per share rating is relatively low because it's just started to become profitable. Uh, this is interesting. It's in Calgary, which I definitely I definitely like the Canadian oil companies. That's definitely for sure. So this is a very, very interesting one. Normally I wouldn't recommend a company like this, but I definitely think this one is definitely worth looking at. Um, when you're buying penny stocks like this, your stops are incredibly important. There was a buy point on this one, and the buy point for Grand Terra. Let's see, and I'm just doing this on the pattern recognition. 31% above. So really, this isn't in a traditional buy zone. Basically, the buy point was $1.01. So, boy, this is an interesting one. You know what? You might want to try a spin on this one. It's got a relative strength of 99. So I think this one might be actionable. I mean, normally I'm not a fan of penny stocks. I'll be honest with you. But here's what I think you can do. Possible, you know, possible buy on this one above. So I would set possible buy. I would set limit order for. I would try to put a limit order right at the 10-day line. That's kind of where I would buy it if I did buy it. I haven't done anything with it, but the 10-day line is, yeah, so about 130. I would want to see if I could get in there at about 130. Let's see on the technicals where that 10-day line is. Yeah, 131. So here's what I would do on this one. Possible I set a limit order at $1, $1.31 per share. See what happens. So that would what on this Terra Energy, which is the Canadian company. You know, I think you might have something there at 131 a share. It's a very cheap one. I probably would not buy a lot of this one. I probably will not be buying this one, but that's where you possibly could get in. We did have a little bit of weakness in the relative strength, but everything else is looking very good. They looks like they've made a nice find. So thank you very much for bringing that up on TikTok. Very, very much appreciate that. Very interesting stock. So that one was very interesting. All right, let's see if we can get another one. What do you think about NAP? Just have a little bit of a small screen on TikTok. So let's look at NAP And that's another one that's coming from TikTok. NAP is the stock. And this one, I don't think that's coming up. So I didn't see that correctly, I don't think. Let's see if I can get that. All right. Oh, what about DWAC? This is the SPAC. This is the Donald Trump SPAC. DWAC. This is Digital World Acquisition Corporation. I don't know if they've done anything, but it does seem to be, seems to be some interest in this one. I'm not currently in this one, and it hasn't really been around long enough. This is one of the reasons why you want to be really careful when a stock is first comes out. As you can see, it's spiked up here to 175, but it seems like it's getting some support. It seems to be getting some support here. So that is the trend, and the trend is up. The question is, would I buy this? Probably not. But then again, in terms of the checklist, it's really weak on the checklist. 56. I think you just got to give this one more time, and that's probably not the answer that you want to hear. But on Digital World Acquisition Corporation, I think that you have to give it more time. So I would, give Digital World Acquisition Corp more time. So it's not a time to buy it right now, but I wouldn't rule it out in the future. So give this one a little bit more time, and I think that one might work. All right, let's take a question. Thanks for the video, Jim. Yeah, absolutely. You can definitely make money in the stock market, and it's just following the CanSlim rules. And by the way, if you're interested in CanSlim, this is the method that I use. It's one of the most successful methods out there, and you can definitely find out more about it by going to the website and clicking on the link. I have a link for it. This is invented by William O'Neill, and it is many of the top traders in the world use it, and you can find out more about it. CanSlim at www.Dallas Trading Floor. Thank you for watching, by the way. All right, well, we're almost at the end of the show here. I want to get maybe one more question, and then I got to go because it's just we're really over a little bit. Thank you so very much for everybody jumping in here. And let's look again at Moderna. I want to look at Moderna because Moderna is showing up on my screen as a potential short. mRNA is the symbol for it. Of course, they're one of the RNA vaccine makers. And I do think that, they may be in a situation where they might be vulnerable to some short selling. And here's why I think that. As you can see, we had this tremendous upward motion on Moderna, but since about January, we've seen this movement down, and we're below. We have the 200-day has moved below the 50-day has moved below the 200-day. That's the death cross. That means showing weakness, and it seems like it's having a lot of trouble holding on to the 21-day line. So even though they've had some tremendous sales, and look at those sales, they're just fabulous. They're up just tremendously. I do think this one likely is headed lower just because I think it got a little bit ahead of itself. Remember, the stock market is a leading indicator, typically 6 months out in the future. So if COVID doesn't go away, but reduces itself, Moderna will not do as well, and that means it could potentially move a lot lower. So this one has the potential of possibly moving down. A lot of people are in this stock, and I think a lot of people are going to need to get out. Unless this thing is going to be acquired, I do see a lot of weakness in this stock, and I think potentially it will be a decent bear trade. So that's my opinion on that. Well, thank you so much, everybody, for taking a look today. Do come back tomorrow. We'll be back. We'll be back on Monday at 4:30. Trying a new time gives me a little bit more time to prepare for the show. Thank you, everybody, for taking a look, and I will see you on next week on Monday. By the way, if you can, this would really help me out a lot. If you can like the show, and if you're on on YouTube. If you could subscribe, that would be great. But if you like it, that helps us an awful lot, gets us out to more people. We're over at 100,000 on TikTok, and we're trying to build that many on YouTube as well. So until Monday, happy trading, everybody. Have a nice weekend.